So hello friends, welcome back to our channel. Today in this learning video we would see what index or indices are, why are they given utmost importance, and what is Nifty, Bank Nifty, which most people are buzzing around, and why they have such significance, which are the various other sectorial indices or indices representing market in Indian Stock Exchange. We would also look at why and how price of indices move and what is significance of Nifty and Bank Nifty. So let's move on to our first topic, that is what are indices. So in India there are two major stock exchanges, one being National Stock Exchange and another being Bombay Stock Exchange. So Nifty 50 is representing National Stock Exchange and Sensex represents Bombay Stock Exchange or BSE. So what are indices? It is a measurement of price performance of a group of share from a particular exchange, and it represents a specific sector or the complete market or economy as a whole. So indices are not just computed using a simple average method, that taking companies and their market value and just combining them and just averaging them out and saying that this is the index. No, where it is computed using market capitalization weighted method, which assigns a weight to a specific company based on its market capitalization. So HDFC, TCS and Reliance Industries being the companies which have highest market capitalization, so would have more influence on the market. And when we say markets, we basically refer to Nifty, which is Nifty 50, and Sensex. So they contribute the most in influencing our markets because of high weightage assigned to them. So Nifty 50 is index representing National Stock Exchange, whereas Nifty Bank, Nifty IT, those are sectorial indices. So now we would look at which are the different sectorial indices other than Nifty Bank and Nifty IT, and which are the other indexes representing National Stock Exchange, and why Nifty 50 is the most prominent among them. So this is NSE India official website. I'm clicking on it, and here you can click to view old website. So in this old website you can see products in which indices, about indices, and you can see broad market indices, so which consist of large liquid stocks listed on the exchange. So Nifty 50 is a weighted average of 50 companies in India. These are the companies which are included in Nifty 50. As Nifty 50 represents the market as a whole, so it consists of companies from all the various sectors, namely services, consumer goods, automobile, financial services, telecom, oil and gas. What is the weightage in Nifty 50 given to each and every sector, and which are the most highly weighted companies in Nifty 50 and which influence Nifty? So financial services has the highest percentage weightage in Nifty, followed by IT, oil and gas, consumer goods, automobile. So if banking or financial sector is exceptionally strong, then despite of pharma, metal, cement, power, all these sectors being on negative note, the financial services sector would outperform them and Nifty would continue rising. These are the 10 most highly weighted companies in Nifty 50. First being Reliance Industries having weightage of 11.88%, followed by HDFC Bank 10%, HDFC Housing Finance around 7%, Infosys 6%, ICICI 5%, TCS 5.2%, and so on. While markets were recovering from COVID-19 crisis and all the banking and financial sectors were on a strong negative note, so weak financial sector was outperformed by oil and gas and IT sector. So Reliance Industries, which comes under oil and gas, and Infosys and TCS, which comes under IT sector, had significant weightage in Nifty 50, and they were continuously rising and also reached their 52-week high levels. So hence prevented Nifty from falling as compared to Bank Nifty, which we would see. Along with Nifty 50, there also are other indices which are Nifty 100, Nifty 200, Nifty 500, and these are all large cap indices. There are also mid cap indices and small cap indices, and these three are based on market capitalization of the companies which are included in them. So these are all the stocks included in Nifty mid cap 50, and why it's important for you to know all these things, that Nifty mid cap, Nifty small cap, is because that whenever markets are about to fall or about to rise, then firstly small cap indices fall, then mid cap, and then all the heavyweights come down. And similarly, when markets have to rise, first of all small cap indices rise, then the industries in the mid cap indices rise, and then the heavyweights take the market or take the index to higher levels. So there are also sectorial indices which represent an individual sector as a whole. So there are Nifty Auto Index, Nifty Bank Index, Nifty IT, FMCG, and so on. So we will look at Nifty Bank and the stocks included in Nifty Bank. Nifty Bank is an weighted average of these 12 banks, and these are the 10 prominent banks having significant weightage in Nifty Bank, and the highest weightage being assigned to HDFC Bank, followed by ICICI, followed by Kotak and Axis and SBI respectively. So if two major banks, let's say HDFC Bank and ICICI Bank, are strong negative note, then as their combined weightage is around 50%, then you may expect a fall in Nifty Bank. So in the next half of the video we would see that how the big players and the institutions use these high weightage stocks to control indices in a limited way. So why indexes are of utmost importance despite there is no trading in indices and they are just a simply weighted average. So why are they given utmost importance? For that we would look at market turnover, in which you can see in equities around 68,000 value was traded, and today around 64,000 crore was the turnover of market. And you can see combined index future and index option turnover was around 40,000 crores plus, and today it was 45,000 crore plus. Indexes and future are based on calculation of, or based on simply weighted average of stocks. So stocks are the instruments which influence indices, and indices in turn influence their futures, and which also influence their options. So what fundamentally affects everything is stocks, and what is the value being traded in stocks is around 68,000, and there are over 1500 plus stocks listed in NSE, and index trading is primarily done in only two indices, namely Nifty 50 and Nifty Bank. And Nifty IT is also thinly traded index, but major volume is in Nifty Bank and Nifty 50. So you could see that more than half of what is being traded in equities is traded in only two indices, namely Nifty 50 and Nifty Bank. So big players use equities to influence index futures and options pricing because they involve huge amount of cash and provide very high returns as compared to returns provided by equities. One thing which you must note, and which I'm stating again and again, that buyers and sellers in futures or in options do not affect their prices. What affect their prices is demand supply in the equities, and in those equities which affect the prices of the underlying spot the most. So thank you friends, happy learning, happy trading.